Welcome to Lickin' on Lending, the podcast that dives deep into the heart of the mortgage industry. Your host, David Lickin, bringing you the latest insights, trends, and updates from the world of mortgages. Whether you're a seasoned industry veteran or just getting started, this show is your go-to source for all things mortgage. Let's get started. This is Lickin' on Lending. Now your host, David Lickin.
Folks, we have so many podcasts. We talk about mortgage operations. We talk about technology. And there's a lot of great things we can cover. But at the basis of our mortgage industry is mortgage loan originations. And today we have one of the best doing this. And he is now having a big impact on so many new originators, existing originators, helping contribute to their success. I'm talking about Dustin Owen, better known as D.O. He joined the mortgage industry only 2004. Now, for someone like me who's been in since 1973, he's a newcomer. He's been around. 2004 is a good amount of time in the industry. He started out as a rookie, as you're going to hear him talk about. Very quickly, he became a top producer in his company, top all the way around. He began to find the opportunity to make a difference and duplicating himself and others. Hence, he launched his podcast, which is now the number one podcast to mortgage loan originators in the nation. Down over 1 million downloads. You're going to hear him talk about that in today's interview. Without further ado, let's get Dustin on here and get this started. Thank you. Listeners, we're in for another treat today. We get the chance to talk to one of the people that I admire for his success as a loan officer and also as a podcaster. This individual is new from my 52 years experience, new to the industry, but is done extraordinarily well. We want to find out what has been the secrets for him going from zero to so much success in such a short period of time. Joining me today, again, as I said earlier in the introduction, is Dustin Owen, better known as D.O. Good to have you here, Dustin.
Thank you for having me. This is such an honor. It's a full circle moment for me. So thank you.
Well, it is an honor to have someone with your success. You've done so well, and I can't imagine any of our viewers don't know who you are, Dustin, with you having 1 million downloads of your podcast per year. But just in case there's some out there that don't know you, I want them to get to know you. So tell us a little about your journey, about yourself, and how you got to where you're at today.
Well, I appreciate that. I mean, I am a mortgage dude first. That's like, if I get a chance to speak on a national stage, which I'm fortunate to get to do a dozen times a year, the first thing I want people to know is I'm a mortgage person. Like, I come from the streets, 2004, I'm 25 years old, pregnant wife, I'm lost, I'm scared, I'm broke. And like many of us, I think you included, found success first as an originator, and not in the very beginning. I mean, those first 2 years I starved. But by my second full year in the industry, I'd become a top producer. And to me, a top producer, even in today's day and age, it's 100+ units per year where you're self-generating the business, typically on a referral-based setup. And like many, I had to survive the crash. I got that opportunity to survive the crash. There was a brief moment where I thought, well, maybe mortgage isn't for me. Instead, I decided to double down on the little bit of success I had and rebuilt back. And when I rebuilt back, I first rebuilt back as a top producer again. And then I rebuilt back as a branch manager, then an area manager, then a divisional, all while still producing. And along with two partners, I mean, we built our own division starting in 2000 and all the way through 2024, where we did 40 million our first full year together. Pretty quickly, we were doing 40 million a month. And then in the end, you got to think it's 24. It's not like we're talking COVID numbers. And even towards the end of things in 2024, we were still cranking out $70-80 million a month. And purchase-focused, realtor-referred, past client referred business. In about 2020, I got a little bored at work. I had a lot of things going on, work-wise, personal-wise, and I wanted to flex my creativity. And like you, I found podcasting as my way to flex my creativity, as well as my way to get back to the industry. Now, in my eyes, David, I always saw my podcast, or I dreamt my podcast kind of being like, I don't know, Dave Ramsey and Joe Rogan have a baby. It was my opportunity to teach the world, or anyone who's willing to tune in, to teach them everything they don't teach us in school.
Yes.
Right? Everything that my school bus driving mom and my electrician dad weren't talking about at the dinner table. Quite honestly, everything I learned because I became a mortgage loan originator Well, because we called the podcast the Loan Officer Podcast, it attracted a certain type of clientele. That clientele was men and women who were either entering the industry as originators, or they were already licensed originators, but they were looking for support. They were looking for mentorship. They were looking for coaching. And a lot of things that we talked about actually spoke to the things that originators need to hear in order to shorten the learning curve, increase their probability of success. So I did that starting in 2020 as a passion project, something that I did a couple hours a week on the side. Eventually, and this is where we get to today, I retired from production in November of 2025. I've gone all in on my content, but more specifically, I've gone all in on coaching and consulting, things that I get to do because of the podcast success, and things that I tend to be good at because I can draw from my 20 years experience, not just my successes, but also my failures as an originator, a branch manager, and even a divisional.
I have so many kids in college and universities that are in finance or getting ready to graduate, and they're going like, I've been listening to your podcast, which I love hearing that we've got as many kids at college exploring this as an industry. But if you could answer this question for them, I think many would say, well, what is it that drew you to the industry in the first place, Dustin?
I think like many people, and I'm willing to admit this, I know some aren't, it was the unlimited income potential. It was an opportunity for me to flex my entrepreneurial spirit while also working in a field that I do find interesting. Like, I fell in love with personal finance my senior year of high school, playing the stock market game in like Mr. Boulet's economics class. And I remember going to Oldie Discount Brokerage and opening my very first stock trading account in 1997, where, by the way, I bought Steve Madden shoes, which is kind of really, really unique because if you know the story, Steve Madden was IPO'd by the guys that Wolf of Wall Street. Right? That movie, that book, that real life story. I was no part of that. It's just later in life, I later found out, oh, wait a minute, my first stock that I ever bought. But anyhow, I was that guy, David, that I loved personal finance. I loved trying to find ways that I could better myself in this world financially, typically through working hard and serving others. And the mortgage industry allowed me to work hard, serve others, have unlimited income potential. Although I've never owned my own business, on the mortgage origination side, it's very entrepreneurial. And I always appreciated that. So I think the mortgage industry found me, but I was definitely seeking an opportunity that would resemble mortgage loan originator. I'm sure I could have had equal success working for Northwestern Mutual selling life insurance. I could have had equal success going to Morgan Stanley or Merrill Lynch and going through their financial advisor program. But as fate would have it, the mortgage industry found me.
Yeah. One of the things that I found interesting, as we talked about in your bio, was that you have competed in Ironman races. What is in the DNA of someone who wants to do an Ironman? And how did you convert some of the things you learned out of that to your success, to convert it into the success as an originator?
Yeah, so you'll find anyone who signs up for endurance triathlons, which that's what an Ironman is, or a half Ironman. So truth be told, I've done 4 half Ironmans. That's a 70.3 mile race, not a 140 mile race. I am currently training for my first ever full Ironman. I plan to go to Portugal in October and complete the 140 mile course, which they call the long course versus the short course. But no, my joke, and maybe it's a semi joke, maybe there's some truth behind it. It's when you get tired of running from your problems, then you swim and bike from them. Or when you have so many problems, you can no longer just run from them, then you start to swim and bike from them, right? So that's my tongue in cheek. I don't know. Most of my life, I would tell you I was allergic to running. I was that guy that played football and baseball. And when the baseball coach said, you have to go run the fence, we called them poles, and you have to give me 20 poles after practice, I was like a sloth putting my catching equipment away because I was trying to gamify how I could only have to run 8 of them and not have to run all 20.
So funny.
But I think, you go through phases in life and seasons of your career. And I was at a phase in a season where my kids were going off to high school. That meant I was no longer going to be Coach Owen. Coach Owen used to coach travel baseball and tackle football and flag football. And I was no longer going to coach my son. I had some free time given back to me, and I like to do hard things. I like to push the boundaries. I think every time you do something hard, you remind yourself what's possible.
Yes.
So, the first thing I did that was hard is I completed the 75 hard challenge. That's how I would introduce myself to biking and swimming. And once I started biking and swimming as well as running on a consistent basis, it just seemed natural to say, well, let's just sign up for an Ironman race. And in a weird way, I like to do things that very few people have done, whether jump out of an airplane, whether it's, do an Ironman. It's in a weird way, it's something that drives me.
Well, being successful in the mortgage industry there's not that many people there. A lot of people are involved in the mortgage industry, but to achieve the level of success that you have, what is the type of coaching you do? I mean, when you're talking to originators what is the type of people that are attracted to you and you're running your tribe?
Yeah, so I'm a big believer that I'm not going to motivate you. I'm not a big person who wants to go listen to a motivational speaker. I believe wholeheartedly, if you want to be motivated, get out your cell phone, pull up your pictures, scroll through those pictures. There are enough faces in your camera roll that should be all the motivation you need, whether it's grandkids, whether it's spouses, whether it's friends and family. I think that's the motivation we need. And if you don't have pictures in your phone, then pull up your W-2 or your 401k statement. There's a good chance there's enough motivation in there that you don't need someone like me or you to show up to motivate you. But I do love to inspire change. And I've always been that guy that maybe I felt like I wasn't invited in the room where it happens, or I wasn't included at the cool kid table. And I want to give everyone else the opportunity to not have to fight as hard as I had to fight to gain the knowledge or to be around the experienced people. So when I coach, I come from a place of I'm not going to motivate you, but I will inspire you to change. And I'm going to inspire you to change by giving you access, not just to me, but to my top producers who are coaches for me. And we are going to shorten your learning curve and increase your probability of success, because we're going to teach you exactly what we did to become successful and exactly what we're doing to stay on top. And I feel like most people, we do a great job of telling them what to do, but very few people slow down and teach how to do it, and more specifically, why it's important. So we focus a lot on the how and the why. Because if you tell me to go run through a brick wall, I'm going to be like, you're crazy. If you say run through a brick wall because there's $1 million behind it, well, you gave me a why. I'll go run through that brick wall. Even if I get concussed 3 times and end up with 10 stitches in my head, I know there's a reason for me to go and do this hard activity that's also potentially dangerous. So we focus on the how, we focus on the why. And honestly, it's me giving back to the industry, giving things I wished was afforded to me. I wish I had access to, but for one reason or the other, it wasn't afforded to me, nor did I have access to it.
Very well. You made it in the cool kid table. The sponsor for your CMB, Certified Mortgage Banker, for those that don't know what that means, it was David Stevens, a good friend. And someone that is, I mean, you've run in some very influential circles. David is just truly iconic leader of our industry of this century. In my opinion, just one of those people he'll be dearly, dearly missed. And I encourage everyone to go listen to the interview I did under Licking on Leadership podcast with David shortly before he passed away. And it's one that it'll give you deep insights into one of the people that Dustin ran with. What an amazing person he was. You and I talked about the gaps in the mortgage business sales coaching and sales training business. Tell us about what those gaps are and how are you filling them?
There's multiple gaps. So when I look at the industry, you got to think I'm coming from a practical knowledge standpoint, as well as you mentioned the CMB. There is an academic aspect to it as well. And you know this better than I do. When you host a podcast for as long as you have and as long as I have, you also get to know some pretty influential, successful people. I'm a big fan in general that we tell me stories, but when you don't have a me story, tell a we story. And sometimes those we stories are drawing on the conversations we've had with other super successful people. Like you talk about Casey Crawford all the time, as Casey's like, one of your clients that you loved the opportunity to invest in. I'm sure you have a ton of awesome Casey Crawford stories. They're not David Licken stories, but they're Casey stories, but you can tell them because he's your friend, he's your client, and he's super successful, and he shared them with you. So anytime that I answer questions like you asked, it's like, please know it's coming from a place of practice, as well as academia, as well as, hey, these are conversations I'm having with my friends in the industry from Spokane to Key West and everywhere in between. So here's the gaps. I find that mortgage companies in general cater everything to the top 10%, yet they make decisions and rules regarding the bottom 10%.
Yeah, so true.
And I would love to say, well, let's play some money ball here. And let's understand the top producers are going to be top producers. And we need to cater to them in terms of supporting them, re-recruiting them, making them feel the love. But at the end of the day, like those people are wired and geared a certain way that you didn't do that. They did that. You have the fortune to support them. The people in the bottom 10% are typically the people that, if you look at your P&L, are probably costing the most money. Yet every decision you're making regarding compliance or regarding attendance to meetings or, rush policies is all based on the bottom 10. But no one's focusing on the middle 80. And if we could focus on the middle 80, help them get out of their files, create systems and processes that when they tie into them, they are the same systems and processes that top producers are using. When we can offer the middle coaching that's affordable and good. I've studied this industry. There's a lot of affordable coaching that's not good, and there's a lot of great coaching that's super expensive. How do we offer guidance that's affordable and good? Because if I could help get, or you could help get, every originator in an organization doing one loan a quarter. Now, the goal would be one loan a month, but one loan a quarter for some organizations, that's $400 million in incremental volume. For others, it's 40 million, even 40 million at a 25 basis point net revenue, which was, I think, the NBA's latest stat. Like, that's substantial money that you're leaving on the table. So I think the first thing that I see happening is we're not doing enough to help someone go from 4 to 5, to help someone go from 3 to 6. Or sometimes we have someone doing 4 to 5. They're capable of 10, but no one has ever shown them how, nor have they provided the structure to allow them to get there. The second thing, what are we doing about the future of this industry?
Yes.
We talk about it. We've been talking about it since I got into the industry, and I'm fortunate. I went to work for, if you remember, David, there's a company out of Atlanta called Home Bank Mortgage Corporation.
Absolutely.
I'm a product of Home Bank Mortgage Corporation. When they brought me in from TV advertising, I knew nothing about mortgage, but they put me through a program. And 20 years ago, Home Bank was still the creme de la creme when it came to bringing people into the industry. And not many have actually been able to replicate that success. Here we are 20 years later. So something that I focus on is that I focus on creating opportunities for individual originators as well as entire organizations where I'm like, give me your high ceiling, full gas tank originators who aren't yet generating 20 to 30 leads a month, who aren't yet funding 4 to 5 loans a month. And let me work with them for 6 months. Let me put them through a 16-week program. And if you don't want to have me do it, fine. But then what are you doing? When I'm speaking to the industry now, what are you doing to bring people into the industry and give them the same opportunity that we have had in order to, basically serve our community and fund a bunch of loans?
You talk about Moneyball. That's one of I love that movie. I love the whole concept behind that. How do you integrate that into your coaching? How are you making that concept work for those that you're coaching?
Yeah, so I'll use Moneyball examples specifically with the divisionals or even the branch managers that come in typically with a group of their originators, or maybe they're hiring us for a consulting standpoint where, I'll look at a group of 40 originators and I can sit down with a divisional and say, if you had 40 originators that met this criteria and we put them through this program for 6 months, you are not going to hurt my feelings if you say that your preference would be that we help 8 of them, 20%, recognize that mortgage is not in their cards for a career, right? Because you know this better than me, but that low producing originator who's not doing the work to become average producing is dragging on the P&L at $2,000 a month.
Yeah, and it's dragging on the energy of the whole company. It drags the energy.
Yeah.
It drags down. There's so many reasons why to examine, either fix it or eliminate it. It's one of those things.
Yes. Yeah. It's like what you tolerate sets your standard. So when you tolerate low producing, when you tolerate people not meeting your minimum production standards or your minimum sales activity standards, you're letting everyone else know that behavior is acceptable. So I'll sit down playing Moneyball and say, give me 40. And if we have 8 of them out of the program and out of your organization by day 91, I just added to your bottom line 8 times 2 is 16,000 a month, right?
Yes.
That's pretty decent ROI. Then it's like, of the 32 that are still in the program that are going to graduate, 6 of them will end up becoming your next President's Club members. But then that's going to leave us with another 26. If those, because the President's Club members, they're the ones that we brag about. Those are the ones that end up on the highlight reel. But let's talk about the 26. Those 26 may only be an extra loan a quarter. Well, that's 26 loans times 4 quarters. That's 108 loans at a $350,000 average loan size. That's $40 million in incremental volume. So then once we figure out that math, we then back into what is it worth to you, the company operator, to invest in these people's success? And then when I'm playing Moneyball, I also walk them through this. I don't think that cost should be a company cost. I think it should be a shared cost. Corporate pays a little, branch pays a little, and the LO needs to have skin in the game.
If they don't, if they're not investing in their own future and you're the one making all the investment, you got to ask yourself, where is this relationship going? You're setting yourself up for someone to be doing more taking than giving back. And I think that's so important. I love what you were talking about. It says why focusing on being the best loan officer is no longer enough. I love focusing on the potential of raising up that 80% of that middle group that has the potential to grow. But when do you coach to the decision to continue with that person, seeing the potential, and then also seeing the potential that they probably don't have the potential for this business and you need to help them find another career where they can be successful?
Yeah, I mean, early on, and you're talking about the people who are producing low tend to produce low because they have bad habits. They don't have structure. They don't keep a calendar. And more specifically, they don't prioritize their sales activities. They don't probably have a marketing strategy, or at least a marketing strategy that they implement and execute on. Those are typically easy conversations. And I learned this the hard way. I'm actually doing those people a favor because they don't want to admit to themselves and others that they're not cut out to do this. They're afraid of telling people they failed. So they just hang out, but they can't pay their bills. They're not making money. They're racking up credit card debt. So I find as a leader, if you want to be a great leader, do them the solid and release them, allow them to go seek opportunities in other industries. So that's probably an easier one. I think the harder one is, someone is doing 2, 3, 4 loans a month and they're not a pipeline terrorist and they toe the company line. I think for those people, we give them the opportunity to be inspired to change. We focus on things that James Clear teaches, like 1% better in his book, Atomic Habits. And if they're resistant to change, but they're good people and they toe the company line, I think we continue to support them. But I don't think I continue to throw resources at them. So I just told a coaching student today who wanted to renew with me, I said, I'm only going to renew if you continue to make progress and these calls don't get stale. And I think that's where the manager has to be involved to be able to recognize if you're just showing up and going through the motions, let's terminate not the employment relationship. Let's terminate the mentorship coaching relationship. And as long as you can meet my minimum production standards, you're not going to be a pipeline terrorist. I will continue to support all originators because again, when I'm playing Moneyball, those originators doing 3, 4, and 5 loans a month, they are actually my most profitable. They're not draining marketing resources. They're not draining LOA personnel type resources. And as long as they have a decent product mix and their PEs are reasonable, honestly, I'd rather have in some cases, 15 or 20 of them than I would 3 people that are doing 20 transactions a piece, because it hurts more when that person moves on. And sometimes those people do great volume, but they're not the most profitable. So there's always that balance that, you know this better than me, but that balance that we all have to understand and mitigate towards when we're running a large scale operation.
What the privilege of working with a lot of originators now. You're one of the top coaches out there. You're doing a great job making an impact on so many people's production companies, but their lives. I think it's really encouraging to see that. What do you think the future looks like for loan originators?
So I think we leaned into this with the last question, and maybe we didn't unpack it as much. You've heard me say, and you all will continue to hear me say, it's going to be a big theme of the Caribbean Takeover event my team is putting on in September. I want them to fire the loan officer. I think being a great loan officer is so 1997 to 2007. I want people to become great business operators, or what I call mortgage operators.
Yes.
Right. So we need to approach this as you work for David Licken, LLC. Now, you may be a division of Movement Mortgage or a division of Cross Country or a division of Barrett Financial, but we all, as solopreneurs, we operate a business within a larger business. So I think the LO of the future will be hyper local. They will be the source of information. They will be the subject matter expert for their friends and family, for the people in their community, for their past clients, for real estate agents and home builders. I think they'll start to be even more a source of information on TikTok when they live stream, or, when they start hosting virtual home buying workshops and they start attracting the end user, which for us is the home buyer or homeowner, onto some kind of informative, educational, free for you type content as a way to be sticky. I think ultimately my technology, or what I joke, my robots will do the work. So when I say fire the loan officers, because I've had a lot of LOs work for me, and I have a lot of friends who are LOs, and they love, hey, what makes you a great LO? Oh my gosh, David, I'm the best at putting a file together. I'm amazing at calculating income. I know how to hand off to my processor better than anybody hands off. I've never had a rate lock get blown through. Like they talk about all the work that LOs get to do once they've done their job. But when LOs can understand it's your job to get a lead, it's not your job to be great at structuring a loan. No, that's the work you get to do once you've done your job. So I think the future originator needs to be one that understands he or she is operating a business. They are out there networking. They're deploying a marketing strategy that allows them to be the subject matter expert and the source of information. They're a great advisor and a great consultant. They're probably even a great communicator and a great presenter. And then their robots and their technology is going to do all of the work behind the scenes that used to be what they got excited about, bragging how good their skill set was.
Boy, how can people learn more about you and get signed up in your coaching program?
Love that question. First name, last name on LinkedIn. So Dustin Owen on LinkedIn. I have like 33,000 followers and growing. I'm super highly accessible. Just send me a message. My website is tloponline.com. TLOP's the brand. If you break it down, it stands for The Loan Officer Podcast. But ultimately, it's now the brand that we were able to build because of the podcast popularity. You can watch or listen to the podcast on YouTube, Spotify, and Apple. Literally just search The Loan Officer Podcast. Yeah, Instagram, I'm at The Loan Officer Podcast. But those are probably the easiest ways to find us. I jokingly say, and I'm going to pull from Kirk Signetti, the Indiana Hoosiers football coach.
Yes.
Google me, look me up. No, it's one of those things that if you go to Google and you type in Dustin Owen, you type in the Loan Officer Podcast, you type in TLOPS coaching, I'm pretty confident you're going to find it.
Yeah. Well, I recommend our listeners to do so. Even if it's just a discovery call, just find out. If you're new to the industry, thinking about the industry, talk to Dustin. Probably be a good idea to first listen to some of his podcasts. I'm always impressed with a person that listens to the podcast, gains knowledge, and then calls me, versus the one that hasn't done that. So take the initiative to listen to what Dustin has put out. There's a lot of great content out there, Dustin. Kudos to you and your success and the podcast. It's fun to talk to a fellow podcaster. You're amazing.
Yeah, no, it was an honor, David. I said it at the top of the show, and I'll bookend it with this. When your team reached out to invite me on, you made my heart smile. So thank you so much. You're a trailblazer in so many ways, including podcasting in our space, right? But I just appreciated getting to know you throughout the years, running into you at conferences, and now the time we spent together. Much appreciative. And in group, if you don't like listening or watching podcasts, that YouTube channel that I talked about, if you like free coaching and free training, I have 400 pieces of content that aren't podcast related on that YouTube channel. That is basically free coaching and free training. Go knock yourself out, get lost, and enjoy yourself on our page.
It's really good stuff. I listened to a number of those YouTube trainings, and boy, I said, this is solid material. So I'm so glad you joined us for the podcast. Listeners, reach out, get to know Dustin, listen to his podcast, get over his YouTube channel, soak this up. It'll make a difference in your business. Dustin, thank you so much, friend.
David, thank you so much.
Folks, I hope you enjoyed this podcast with Dustin. It's a lot of great information in here. I love finding people who are just making a difference in other people's lives. That's what we seek to do with this podcast. I hope this made a difference in your knowledge of the industry, wherever that may be. I want to say a special thank you to our sponsors: First Close, Title Ease, Angel AI, True, Candid, Mortgage Bankers Association of America, Lenders One, Modex, Redder, Mortgage Advisory Tools, and Fuel Inc. Thank you, everybody. Be sure to check out all our sponsors and all of our podcasts at our Lickin' on Lending website. Thank you so much. Have a blessed day. Look forward to seeing you back here for our next podcast.
You've been listening to Lickin' on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Lickin' on Lending.